Good morning. This is Dylan Jovine from Behind the Markets. Happy Tuesday. Today is Tuesday, February 11th. And yesterday, I talked about the massive capital spending that we're seeing on AI from the Magnificent Seven, the big tech companies. And it's really unprecedented. When you look at what Amazon, Google, Meta, Microsoft, and all these companies are doing, is they have committed publicly in their earnings reports to spending a combined $325 billion in capital expenditures for 2025. Now, in dollar terms, this spending for data centers and energy is really unlike anything that we've seen since the dot-com boom. It's a big deal. A lot of investors are really starting to say, okay, at some point, they need to see a return on that investment. And it's very instructive here, a lesson that I learned from Warren Buffett, actually Ben Graham and Warren Buffett, in the book, The Intelligent Investor. They talk about the airline industry in the 1960s. In 1960, the airline industry flew 10 million people a year. By 1970, they flew 100 million passengers a year. That's a 10 to 100. That's a huge increase, 10x, right? But the combined losses for the airline industry over that decade were $2.3 billion. Now, you say to yourself, how can an industry that goes from 10 million passengers to 100 million grow that much? How can there be such a massive loss at the end of 10 years? And the answer basically is overinvestment. They invest way more than the infrastructure then is required. And a lot of folks are saying, among them, what if and when this bubble pops, it's not a question of if, it'll be a question of when the bubble pops, it'll likely be one of the big triggers here. It will be this return on spending. These guys are investing so much money. What are they getting back for that return? Or are they just going to be destroying? Has this become kind of an arms race mania where everybody is saying, and I'm already hearing the famous word of all bull market, the famous expression, this time is different. This time is different. You hear people saying, this time is different. We have to spend this money because blah, 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 blah. This time is different. Those are the scariest words. This time is different. The scariest 4 words in investing history, because it's never different, okay? This is just the same thing repeated over and over again, which is interesting facet of human nature. But the point of the matter is that you can have an industry that grows 10x and lose a lot of money. So we are probably seeing a massive overinvestment, frankly, in terms of return that you're going to see. I'm just going to go some numbers here. Microsoft announced an 80% increase in CapEx, but they're only they think revenue is going to go up 13%. Meta announced a 74% increase in capital spending, but revenue is expected to go 14.68%. Alphabet is jumping 42% in capital spending, a 9.5% revenue growth. And Amazon is announcing a 26% increase in capital spending, 10.75% revenue growth increase. When you see revenue only grow a little bit, but spending grow a lot, what happens to profit margins? What happens to profit margins? They shrink. And when profit margins shrink, what happens to share prices? They go down. So we really need to see return on that investment, so that every $10 billion that one of these companies spends actually shows a return to shareholders. And this is the thing that is on my mind today. And it's something that should be on your mind too. Have a wonderful Tuesday. See you tomorrow.